The rise in the price of Bitcoin and other cryptos, also known as altcoins, has attracted the attention of millions of investors, regulators, financial companies, and the media. However, for many, it's challenging to understand the basics of Bitcoin and other cryptos. There are some reasons why cryptocurrencies sometimes sound embarrassing. There's a lot of new and technical language involved, particularly for those trying to understand how the technology works. Many cryptos are experimental projects exposed to disagreements about how they should evolve among developers, miners, and investors who have large holdings. The concept itself challenges the conventional understanding of money. Cryptos have been defined as everything from the future of currency to outright scams and Ponzi schemes. Bitcoin and cryptocurrency 101 cryptocurrencies, also often referred to as cryptos or coins, are digital currencies that are secured through a cryptography structure within what's called blockchain, a distributed ledger of all decentralized transactions that is considered transparent and extremely secure. Unlike traditional currencies, cryptos are not controlled by any central government or authority. For example, in the case of some cryptos such as Bitcoin, Monero, and Litecoin, the supply of new coins is controlled by a process called mining. Other cryptos are pre-mined, where the mining happens before the public launch of the crypto. Pre-mined cryptocurrencies are sometimes viewed negatively, as they are usually promoted to raise demand and drive up the price, allowing developers to cash out their positions. Since many cryptos have been created as open source software, they continue to evolve as developers work to implement solutions to address new problems. From the market capitalization perspective, Bitcoin is the most valued crypto. According to the Bitcoin white paper with Bitcoin, the original developer, Satoshi Nakamoto, set up to create a peer-to-peer electronic cash system. The white paper was writing under what seems to be a pseudonym involving a flavor of mystery around the original creator's true identity. People who track the Bitcoin network's early activity estimate what whoever Satoshi Nakamoto is. He or she actually holds about 1 million Bitcoins. Some people believe it seems a minimal amount of this Bitcoin has been moved, spent, if any. Of course, this is all based on suppositions and might not represent a fact. One of the most important innovations of Bitcoin was creating a system that did not rely on third parties to process electronically payment. Instead, it relied on the consensus of the nodes on the network. It also created a model of currency where the supply could not be altered by any central banks or government. Beyond Bitcoin, there are other popular cryptos. Many of them were created by developers expecting to solve shortcomings of certain coins or provide additional features not present in others. There are some frequent terms in the crypto world. They are address, altcoin, blockchain, fork, initial coin offering, smart contract, wallet, and wallet. How are Bitcoin and cryptos used? Some merchants accept Bitcoin and other cryptos directly from a user's wallet, even though they usually charge very high prices for this sort of transaction. They are divisible into tiny fractions. Others have created ATMs where you can use US dollars and other official currencies to buy cryptos and sell them to get cash. Other cryptos have more specific uses and can be used to pay for services on a certain network. Are there cryptocurrency stocks or ETFs? Yes, there are ways for traders to get exposure to the crypto market. It's important to keep in mind that these are considered higher risk investments, and the cryptocurrency related aspects of these companies generally compromise a minimal part of the overall business. Some factors to consider before investing in cryptocurrency related stocks and ETFs. First, these are experimental financial products with a short trading track record, and it's essential to remember that there are extremely high risks involved. if you choose to invest in cryptocurrency-related equities and ETFs. While it might not be easy for governments to regulate cryptos directly, they can regulate exchanges, brokerages, and third-party wallet providers, making it more challenging to use them. This could drastically impact the dynamics of supply and demand and limit their potential use. Another point to take into account is the risk tolerance and how you have handled volatility in the past with your other investments. Cryptos are high volatile products, and cryptocurrency-related securities can experience similar price swings. Traders who don't think they can physiologically or financially outstand double-digit percentage swings in the short term should probably avoid cryptocurrencies. You can find out more details about cryptos in other videos of ours here on YouTube, through our podcast on Spotify, or on our internet portal, an investment academy with several interesting articles. And please, don't you forget, if you like this content, subscribe here to our YouTube channel.